Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of October 14th through October 18th. We're in part one of our weekly trading game plan. We'll try to help you make money trading through a storm or even a hurricane like Hurricane Milton that we just went through. So let's get started. So here's our Google document with our notes for part one of our weekly trading game plan for the trading week of October 14th through the 18th. We keep our notes documents for our weekly trading game plans in publicly accessible Google documents. Our notes documents contain links to bonus videos, to the tools and resources we use to do our market analysis, come up with our trading strategies, trading ideas for the week. You can find a direct link to this Google document in the description box below. And we keep all of our weekly trading game plan notes, Google documents in a publicly accessible Google Drive folder, so you can refer back to the notes from this week, as well as notes from our previous weekly trading game plans. And you can find a direct link to that Google Drive folder in the description box below. Welcome Fairchild, Alan Krantz, Gerald Fitz. Thank you all for joining us in the chat today. Hope you all survived the week. And again, I hope all of our fellow BeachBum traders survived Hurricane Milton okay. So we'll get started looking at how the markets ended up on Friday on the main page in FinViz. So we can see markets popped up early, ended all positive. The Dow and the S&P hit new all-time highs during the day. S&P closed for the first time above 5,800, we'll see. NASDAQ also up 0.33%, but not a new all-time high there. We had 76% advancing, only 19% declining. Got almost 90% new highs, only 10% new lows. Still got 66% above their 50-day moving average, 33% below, and about 68% above their 200-day moving average, about 32% below. So overall, Friday bullish day. As we'll see, the markets all reacted positively to the lighter, weaker than expected PPI data. So we'll see that in a minute. See in the heat map, it wasn't really a Mag 7 led rally. It was mostly a broader rally. So most of the other sectors in the green, Tesla negative on their less than exuberant reaction to their robo-taxi event. Broadcom, Apple down a little bit. We look at the news, retail traders and base market turbulence, bets on volatility. We'll see that in the VIX and the VIX term structure. Bull market turns 2. Why raising cash is a smart portfolio move. See Dow hit new record highs after JP Morgan Chase. So we saw some of the first of the major financials report their earnings. JP Morgan, very positive reaction to their earnings. So a big bounce in there. Dow 400 points to new record. S&P closes at above 5,800 for the first time. Welcome, MD. Thank you for joining us. Hope you had a great trading week and are doing well. Saw oil popped up as high as 78. We'll see that in the futures. Again, Gulf War tensions, continuing volatility in oil did end just above 7,500 or 75, so it's got support at 75. Right now, resistance probably at 80. Natural gas declined down a little bit from that $3 level down to 260. Gold had a strong run early in the day. I'm not sure why gold and silver reacted so positively to the weaker PPI data, but we saw a run back up, and we'll see it may test its all-time high again. See the futures right now, Dow and S&P up, NASDAQ down, Russell significantly up. Also had a very strong reaction, bounce in Treasury yields. So decline in Treasury prices. We can see the 30-year is now up to 4.38, 10-year back up over 4 at 4.07, and the 5-year at 3.87. So again, very strong yield reaction in the bonds. So essentially, in my humble opinion, the bond market is telling you it doesn't believe we're going to have more rate cuts anytime soon. So that seems to be what the bond market thinks. So we'll see. So next we'll take a look at the major indices, a breakdown of the technology components. Just a quick reminder, you can see these screeners in our notes documents, as well as the screener sheets of our ETFs and watchlist Google Sheets. Let's take a look at how the major indices each performed in more detail. See, the Dow continues to be strong up above that upper trend line, making new all-time highs. So continues strength in the Dow. Very similarly in the SPY, trending upward, made a new all-time high. Again, Dow and S&P by far the strongest of the indices. Q's not as strong, did test some recent high. Looks like it may have broken that recent high, did break the upper trend line. It's not tested the high from July, so potential more upside in the Qs. We'll see. It has been the weakest of the indices. And again, IWM, the Russell really needs rate cuts. So we'll see. We had hotter than expected CPI data. So negative reaction to that. Bounced off the 50-day moving average. Bounced up on the weaker than expected PPI data. But again, the Russell small cap is going to be very sensitive to the probability of future rate cuts. So trading pretty much flat laterally until we get further clarity on rate cuts. Welcome to Ricky Khan. Thank you for joining us. Hope you're doing well. So if we look at the breakdown of the technology components, see again, ARC doesn't really seem to be going anywhere, just hugging its 200-day moving average. So again, not growth companies, innovation, going to be again sensitive to rate cuts. See the FANGs finally broke out of that downwardly trending channel, broke some recent August highs, got plenty of upside, but again, weaker than the overall technology sector. Semiconductors also relatively weak, so it did stay above its 50-day, got resistance from the 200-day. Again, we pointed out that death cross a while back, so again, semiconductors slowly trending up, but not a lot of strength there. Biotech's another sector that needs rate cuts, so see it had been downtrending, broke down below the 200-day moving average, broke down below that lower trend line, did bounce back up on the weaker than expected PPI data, but resistance from the 50-day moving average. So again, another sector that needs rate cuts, going to be sensitive to the probability of rate cuts. Leveraged Qs, going to be the same as the NASDAQ. And broader technology also broke above its trend line. You see a double top, so it broke above that, broke the August high. So broader technology has potential for more upside as well, but it's nowhere near, again, the July high. So we'll see if rotation further back into technology occurs or if it rolls over after that initial exuberant reaction. Welcome, Hamster One. Thank you for joining us. Hope you had a great trading week too. Now let's look at a breakdown of the groups and the sectors and the industries in FinBiz. We go to the groups tab. You see Friday, pretty much exuberant rally, everyone green, strengthen the financials, JP Morgan, etc. Industrials continue to be strong. This is interesting. Real estate did react positively to the slight decline in yields on Friday. Utilities as well. We'll see in general, real estate was negative. Again, yields going up. Negative for real estate. See technology, top performer for the week. Industrials, healthcare, financials. Weakest utilities. For the month so far, though, it's been energy. Again, turmoil in the Gulf. additional continuing volatility in energy, basic materials, technology kind of in the middle. Weakest sectors, healthcare, defensives, and real estate. Again, bond yields going up, so downward pressure on real estate. Look at the industrials. See some of the materials bounced up. Again, solar reacts to the bond yield, so bond yields down a little bit. Solar popped up, and bond yields go up. Solar's going to go down. Aluminum recovered. Biotech bounce. Uranium it was down, I think, on Thursday. Bounced back on Friday. Still relatively strong. Some REITs, little positive. Weakest gambling. Not sure which one that was. Silver down a little bit. Auto manufacturers, again, probably Tesla. For the week, silver was positive. Aluminum. Semiconductors positive for the week. Some REITs, gold slightly positive. Weakest number of REITs. Oil, solar, again, very sensitive to that bounce back in bond yields, auto manufacturers, and utilities. For the month, again, uranium's been very strong, copper, silver, sure gold's up there. Materials, steel. The weakest for the month for, again, real estate, REITs, and solar. So I hope that all helps. Okay, let me grab a quick drink and we'll go over the economic data from last week and look at the economic data and earnings calendar for next week. Just a quick reminder, as the important economic data comes out, important economic news, if I am able and we are online, then I will post that as quickly as possible to the Surf the Markets channel and our Discord. Our Discord is free to join. I'll show you that Surf the Markets channel in our Discord. So again, as the important economic data comes out, important economic news, try to screenshot that, capture the raw data, post that in the Surf the Markets channel of our Discord. Again, our Discord's free to join. We'd love to have you join. You can get real-time economic data and news, and also talk about all types of trading, different asset classes, different trading styles, etc., with your fellow BeachBum traders. So you can find a free invite to our Discord in the description box below. Let me grab a drink and we'll go over the economic calendar from last week, look at the economic data for coming up for next week. Not a whole lot on Monday. We've got Fed officials talking, and here some of the Fed officials kind of walking back the rate cuts now, some talking about a pause. So again, the probability of rate cuts probably dropped significantly over the data that we've had. Again, the bond market showing us it doesn't expect rate cuts. Fed GDP, Atlanta Fed has growth higher than expected, so the economy remains resilient. API oil stocks up significantly more than expected, although again, it's the turmoil in the Gulf driving oil prices. Mortgage rates went up because the TLT yield went up, so that's going to be a negative for the housing market going forward. And we got oil inventories, again, up significantly more than expected, but again, we saw a spike in oil prices based on turmoil in the Middle East. I wonder, just a speculation, I wonder if people are stockpiling oil in terms, in case of increased conflict in the Middle East. So I wonder if that's what's driving the oil inventories up. And we got core CPI data, and jobless claims data on Thursday. CPI, the consumer side of inflation, slightly hotter than expected. So we did see a little bit of a negative reaction in the market, but the market pretty much shrugged it off as we saw, then turning around and going for all-time highs back on Friday. So consumer inflation slightly hotter than expected, hotter than previous. That's a negative in terms of the Fed cutting rates. We got jobless claims data, continuing claims were up a little bit more than expected. So people finding it a little bit harder to find jobs. Also initial jobless claims up a little bit more than expected. So more layoffs. So unemployment, should tick up a little bit if this continues. The average, again, up a little bit. So slow weakening in the job market. So we've got conflicting data for the Fed. We've got a weakening job market, but hotter than expected in consumer inflation. So maybe they'll continue to pause unless they're going to prioritize unemployment a little more than inflation. But natural gas storage up a little bit more than expected. We did see the prices drop a bit. Bond auctions a little weak. Then Friday, we got weaker than expected PPI, so producer front end of the supply chain inflation, a little weaker than expected. Core PPI 2.8 was actually up year on year, so that's trending up, but ex-food and energy less than expected a little bit. So a little bit of a mixed signal there. But again, the market reacted pretty positively that there's some slight decline in supplier core PPI data. We also got Michigan sentiment. Again, that's a little negative that the 1-year inflation expectations went up to 2.9%. So that's the wrong direction in terms of anchoring inflation from the Fed standpoint. And the 5-year didn't change, still at 3%. And the overall sentiment and expectations, current conditions, deteriorated a little bit. So again, possibly that higher consumer inflation weighing on the consumer sentiment, a little negative. So again, a lot of mixed signals for the Fed. Maybe increase the probability they'll pause, wait for more data. Baker Hughes count ticked up a little bit. So we had seen a decline last week, and now it's ticking back up a little bit. And maybe they're stockpiling the oil in case of additional conflicts in the Middle East. Total rig count went up slightly. Look at the economic data coming up for next week. Got an OPEC report here if they change their forecast for production. Energy report. Bond auction, still got Fed officials talking, so we'll hear what they think of the CPI, PPI data, if they're going to pause or if they're still on their track for cutting. Mortgage rates, retail sales and jobless claims on Thursday, so that will be interesting to see if that trend in increasing jobless claims continues. If so, deterioration in the job market might increase the probability of a cut. Retail sales give us an idea of how the consumer spending in September. Manufacturing production, some housing. Friday, then we get some housing data on Friday, so we'll see if that increase in mortgage rates negatively impacts the housing market on Friday. Again, more Fed officials. So we just kicked off the heart of the next wave of earnings. We had some of the big financials report. Again, JP Morgan was pretty positive, so the financial sector got a boost. We've got some more banks coming up in the near future. You can see the whole list of who's reporting earnings for next week in the earnings tab in investing.com. So highly recommend you go through that and see how that may impact your trading, impact any of your current holdings. So you get United Health, one of the biggest healthcare companies, kind of one of the Mag 7 add-ons. So that will be significant. J&J, manufacturer, then again, more the major banks, it's Citigroup, Bank of America, Goldman Sachs. So financial sector definitely in play. Some more airlines, retailers. Again, we're just getting into the heart, so get a smattering, and it'd be highly recommended that you take a look and see. There's Morgan Stanley on Wednesday, Bancorp. And Thursday, we've got Taiwan Semiconductor and Netflix. So the start of the Mag 7, the FANG stocks, also big, semiconductor. We'll hear their guidance going forward, their demand that may pop the semiconductor stocks as well as the AI stocks. So again, that'll be a major focus there. Anybody else knows of any P&G, so major manufacturer, consumer defensives. So again, if anyone else knows some other major earnings, please share that with the group as well. Welcome, Balu Dog. Thank you for joining us. Hope you had a good trading week and are doing well. Just a quick reminder, you can hear how we trade around earnings via the link to our How to Make Money Trading When Earnings Matter. And again, earnings definitely matter, as well as the guidance going forward. Also a reminder that Monday, although it's Columbus Day, it's a bank holiday, but the U.S. Equity and options markets are open. However, again, they can't clear through the banks, so the T+1 will probably be a T+2, so it'll take an extra day for settlements as the banks are closed on Monday. We've got the elections on November 5th, and then the next FOMC meeting is until November 6th and 7th. And again, that's not one where we get another SVP, another dot plot. Welcome, George K. Thank you for joining us. Walter, just mobile today, so George K is Saladego, Walter Lyons, I guess, for today. Thank you for joining us, George. Okay, let me grab a quick drink and we'll go over the market screen and Webull. Okay, just a quick reminder, if you're not already using Webull, they're still offering bonus interest on your uninvested cash for your first 30 days. So their current rate with the bonus is 6.25. Again, if we get further rate cuts, that'll probably go down. So take advantage of the bonus interest your uninvested cash by opening and funding your account with Webull. You also get 75 free fractional shares of stock if you deposit 25K or more. Under 25K, you get 20 free fractional shares of stock. Still get the bonus 6.25 interest. And each of your fractional shares is worth $3,000 to $3,000. So If you're not already using Webull, we highly recommend you open an account now. And we use Webull for our market analysis, our trading strategies, the majority of our trading. I'm using the market screen of the online browser version of Webull. So we like to look at the histogram. So we see the distribution of advancers. So we see significantly more, about 3-to-1 advancers to decliners on Friday, but the percentage of advancement was very small. Percentage of decline very small. Quite a few unchanged. An interesting inflow. So after that better than expected PPI data, got a bounce in the inflow in both the NASDAQ and the NYSE that continued till about noon. So right about noon, the inflow of the NYSE continued upward, but the inflow in the NASDAQ and technology steadily declined and had a significant dip at the end of the day. So possibly some profit taking, but also some rotation possibly back out of technology after that initial pop on the weaker than expected PPI data. So I thought that was interesting, kind of back to the normal trend in the afternoon, a little bit different in the morning. Also wanted to look at the Treasury yields and their reaction. So saw they pretty much the high of the the 1 year bounced up and then declined. Yield in the 1 year bounced up and then declined based on that PPI data. 2 year, again, pretty much the high was right at that weaker than expected PPI data, then declined and then picked up late in the day. 10 year, again, the high pretty much at that weaker than expected PPI data, decline and then recovery, and we've still got a inversion between the twos and the ones and the tens, the ones and the twos, but not the twos and the tens. So still somewhat inverted on the very short end. So I hope that helps. Also a reminder, you can see the near-term earnings calendar here in the calendar section in the market screen in Webull. So who's reporting in the very near future? So we see Walgreens Boots, pretty near term. Again, you can see their earnings estimates as well. So a great way to keep track of who's reporting in the very near future. There's United Health. Let's look at the best performing industries for the week. Okay, so we see semiconductors perform pretty well. Looks like AEHR, we've talked about that. They must have reported good earnings, popped up 30%. So I didn't hear their earnings. So obviously a positive reaction to their earnings report. Electronics positive, communications, financials, getting JP Morgan, etc. Pharmaceuticals, a little mixed. Construction, pretty positive. Getting banking, construction, coal, pretty positive. Retail, actually mostly negative. Chemicals, split. So again, pretty diverse. Some technology. Look at the ETFs. So we've got up on the Russell, up on mid caps. So again, people betting on the rebound in the small and mid caps. See, they had been weaker, still up on the Dow, up on mid caps, up on the Qs. That must be 2x long on Bitcoin. YCS is short yen, I believe. So up on small caps. Industries, industrials, again, continue to be strong. Here's transports. We talked about last week. One of the ETFs on transports, pretty positive. Financial services, healthcare, utilities. Some weakness in real estate, a little bit in energy, a little bit in basic materials, lithium, uranium strong. Cyclicals and defense was actually pretty strong. Commodities, electric vehicle recovery. Must be silver. Probably gold. Okay, let's also look at the futures. Just a quick reminder, you can also trade futures now in Webull, so you can here see more details on their previous offer and how you can trade futures in Webull via the discussion in our Discord via that link. If I look at the futures in FinBiz, so you see again, Dow continues to be strong, S&P continues to be strong, both making new all-time highs. NASDAQ, not quite so much, been pretty flat. Looks like it's testing that previous high, but it hasn't reached the July highs yet. Same way with the Russell, got that bounce on the PPI. CPI was negative again, and then PPI bounced back up, so very sensitive to the probability of rate cuts. Nikkei's trending up. Euro stocks and DAX swung back up after bouncing. Oil, we talked about that spike up to about 78, pulled back down after the further turmoil didn't happen and bounced back up again. Oil is going to be very volatile based on probability of escalating conflict in the Middle East. So the VIX is sitting just above 21. It popped up a little bit. I do want to look at the VIX term structure very quickly. So just a quick reminder, you can find the link to the VIX term structure site in the link section of our homepage. Our homepage is beachbumtrading.com, bum without the U. And we've got links to all the tools and resources, etc., that we frequently use in the link section on our homepage. So again, a great resource. You can mark a favorite and use our links to jump to your frequently used tools, etc. So it's at the bottom of the reference links, VIX term structure. So we can see the front month VIX is actually higher than the current VIX. So the green line is the current VIX. So October's futures are sitting at 2120. November's still down at 1930, so it's still below 20. See the curves significantly flattened out going forward. It's still in backwardation up through December, so the bottom is December at just below 19, and then the curve pretty much flattens out going into next year. But again, October futures are higher than the current VIX, so we'll see if that curve shifts upward to match the current VIX. I hope that helps. Talked about oil, natural gas. Again, tested that $3 level, trending back down. Looks like it's testing with support, build that gap from the futures rollover. Looks like it's kind of bottoming around 250, 260 or so. See if it swings back up. Again, gold had been trending down a little bit after testing just above 2,700 and then bounced back up on that PPI data. Again, not sure why gold and silver bounced back up on the PPI data, CPI data. Platinum balance, palladium looks like it's topping out a bit. Corn trending down, oats trending down. Wheat tested that 66.20 level, got rejected, got support just above 580 or so, bounced back up. Looks like it's oscillating at this point, but still trending upward. Sugar rolled over, and we see that dramatic decline in the prices of all the bonds. So again, bond yields all trended back up. It's pretty odd, I think, given that we got that 50-point rate cut, and we expect further rate cuts. But again, the bond market's disbelieving that, and so bond yields spiked up, prices down. Looks like all the bond prices nearly filling the previous gap from prior to the rate cut. We'll see if that's the bottom and they're going to swing back up. So a potential, upside in the future in all the bonds. As again, we expect further rate cuts. It's just a matter of the timing and degree. Again, dollar popped back up over 102. Yen declined. Again, we haven't had any comments from the BOJ that they're going to increase interest rates soon. We expect them to increase interest rates. It's just a matter of the time, and that may have an impact on the yen carry trade further, although I'm guessing people are unraveling that while they're able before that interest rate bounce. So again, we saw the other currencies trending down, euros, pound, Swiss franc, etc., on that dollar strength. So again, I hope that all helps. Okay, next we'll take a look at ETFs. So if anybody in the chat has a particular category, particular topic, theme, you want to look at ETFs, can we use our ETFs Google Sheet once we've identified some potential trading opportunities, be it long or short, then we can jump over to our ETFs Google Sheet, find an ETF with the risk reward profile and the amount of leverage, etc., that we prefer. And we use our ETFs Google Sheet to identify those ETFs. Again, you can do the same thing and get 24/7 access to our ETFs Google Sheets as well as our others by joining our Patreon. So I'm going to grab a quick drink and we will look through our ETFs. Okay, firstly, I wanted to point out an addition to our research sheet. So we'll take a look at this. Hamster 1 in the live chat of last week's part 2 mentioned a new ETF on oil, OILU. This is microsectors oil and gas exploration and production. It's a 3x leveraged ETN. And then I found the inverse of oil U is oil D. So if you're looking for additional leverage on oil, you can look at oil U for a long, oil D for a short, and we'll compare those to some of the other leveraged ETFs we have on oil, like Gush and Drip. So if I go in the research sheet and I do a find on oil U, so here's the risk reward profile for oil U and oil D. So you can see it's got a pretty decent current risk reward profile. Over 2, 5 from top to bottom. Again, when the Google Finance functions are filling in, then these columns will also fill in. So if we look at the profile for oil U, So here's the recent profile. So we see, when oil was trending down, did break at some point below 70, hit around 65, and then oil's bounced back up to 78 or so. So we see, it's pretty significant moves in this oil U. See, it's got pretty good support right around that 28, low 28 level. Plenty of upside, so almost more than a double. Is not optionable. Doesn't look like it pays a dividend. Volume's pretty light, 121. So again, might be some liquidity issues to be aware of. Flex 3x leverage long on the selective microsectors oil and gas exploration and production index. So if we very quickly see if we can get any additional information in the ETF database. So again, you can access the links for their profile in Invis and the ETF database in the columns in our ETFs Google Sheet. Again, you can get information on their profile. Let's see if we can get their holdings. So it looks WTI and cash. So it's going to be sensitive to the WTI price and cash. So you can watch the WTI price in like Thinkorswim with the /CL symbol. So again, that's what oil U and oil D are going to be sensitive to. So again, oil D is the short version, so that's going to be the inverse and 3x leverage. So just the inverse of oil U. I would use, oil U, the top in oil U for the bottom in oil D, etc. Again, not optionable, very low volume, so 67K. So again, be aware of the liquidity if you need to get in or out. So let's compare those to our other ETFs for oil. So we've got Gush's long, so it's got a little bit higher short-term risk reward and bottom to top. 52 weeks, not quite as high. And that's the one we tend to play with, but it's only 2x. So if you're looking for 3x leverage, you might want to be interested in that oil U. Tend to use DRIP. It's a negative 2x, so 2x short on oil. So you've also got longs, UCO, short SCO. So again, you can compare the risk reward profiles of the ETFs we have in our main sheet to the new ones, oil U and oil D. Also be aware of the liquidity issues. These probably have more liquidity. If you're looking for a dividend payer on oil, USOI is the monthly dividend payer on oil that we tend to use. So I hope that all helps. And again, I would recommend looking at the constituents, the profiles, the composition of these various ETFs, see if they're sensitive to the WTI price directly or the oil and gas companies, which would be indirectly related to the WTI price. So someone asked about Boyle, Bell the Dog asking about Boyle. See where Boyle currently is. And bottom at 814, Boyle is the leverage long on natural gas. You can see the risk reward profile. But put that down to the 52-week low. Maybe a 1 to 4. See, oil has been significantly lower, so there's some risk if it deteriorates further back down. You can also trade natural gas long with UNG, UNL. Compare those risk reward profiles. Short with cold. I'm going to cover MD. I'm going to cover Coney, CONY tomorrow in our dividend payers Google Sheet. If that's okay. Keep an eye on the chat, see if anyone else has some other ETFs you want to look at. Otherwise, again, we've got the long and shorts on the various technology components. Been keeping an eye on the cannabis sector ETFs. They're still a little bit above their bottom. I think maybe in the next couple months, those might be interesting. Had a lot of volatility in China, so China stimulus had a big run up, then retracement, significant retracement. Looks like it bounced back up a little bit on Friday, so we'll see. And again, ETFs we tend to use for China's yen long. These are leveraged long and short. Yen and yang. We've also got K-Web, C-Web, etc. And then as a dividend payer, you can look at CLIP. So you can compare which of the Chinas you'd like to play. Again, been very volatile, so a lot of the shorts, again, the Dow is making new all-time highs, so a lot of these shorts are showing as attractive for short-term traders, scalpers, etc. If you think we'll have a quick correction in the Dow or the S&P, you can find shorts and leverage short ETFs to trade those ideas in our Google Sheet, in the FANGs. Financial sector, and we saw that pop up in the financial sector on JP Morgan. So the long on the financial sector is FAS, short is FAZ, or just the sector spider at XLF. Talked about gold. So again, got a number of long and shorts on gold. We tend to use JDXU long, JDXD short. But again, these are based on the miners, not necessarily the spot gold price. JLDI for a monthly dividend payer. Mexico has been very volatile. Again, we've also got individual ETFs, and leverage, different degrees of leverage, both in our main sheet and in our research sheet on individual stocks like NVIDIA, Amazon, etc. So if you're looking for a way to short an individual stock or possibly leverage long, I know a number of our traders really like these leveraged ETFs to trade individual stocks. And up on the Russell, if you think the Russell will continue up. Silver, long and short, AGQ long, ZSL short, small caps, and small cap shorts, TZA, TNA, solar, long, don't have a short on solar. Here's the individual ETFs for Tesla. So we saw that decline in Tesla. So I think it'll bounce. Might be interested in some of the longs. Also the treasuries, different durations, etc. Long and some shorts. Talk about uranium. Volatility, again, the long on volatility, UVXY, VXX, the short SVXY, SVIX or SMOL. And the yen, saw short the yen YCS, long the yen YCL. Hamsters asking about TSMX. So let's take a real quick look at that. X bull on TSM. Looks like it's very new. Only been out since October. Not optionable. Very low volume. Again, brand new. Very low AUM. TSM swaps. Taiwan Semi. So if you're looking for a leverage long on TSM, you might be interested in this TSMX. Again, it's so new. It's hard to see how it's going to perform. Again, watch out. Volume's very low. AUM is very low. Maybe it'll catch on, attract more funds, but again, may have liquidity issues due to it being so new and having such a low volume. So 200% of the performance of the common shares of TSM. So thank you for sharing that, Hamster. If someone's looking for, again, a leverage on TSM, individual stock TSM, check out TSMX, see if that's something that you might be interested in. Okay, let me grab a quick drink and we'll go over our theme for this week. Again, if anyone in the chat has any other ETFs you want to take a look at, I'll try to keep my eyes out. Okay, our theme for this week is make money trading through a storm, or again, even a hurricane like Hurricane Milton that we just went through. And firstly, I want to again thank everyone who expressed concern. We were going through Milton this week. So again, thank you for all your messages and for your concern following the Hurricane Milton. We did lose internet from Thursday at 8:30 to Friday at 11, which was a little strange since it was already pulling offshore Thursday morning. So it was mostly already past us. We never did lose power other than some glitches. But then suddenly at 8:30 a.m., internet went out, didn't come back till 11 a.m. on Friday. I didn't know if we were going to lose it again, but so far it's been holding up after that. So again, in those cases where you potentially are going to lose power or internet, some general recommendations. Again, none of our content should be considered financial or any other type of advice. We're not any kind of professional financial advisors or any other advisors. All of our content's for education and entertainment purposes only. But again, my opinions, my recommendations for how to make money trading through a hurricane is before you're at risk of losing power or internet access, place or move your stops or your take profit orders. Again, in this case, we lost internet access just for just over a day, but we've been out of power back in 2004 when we got 4 or 5 hurricanes. We were out of power for like 10 days, and obviously no internet access either at that time. So again, make sure you're protecting your profits, take advantage of any spikes while you're unavailable, offline, etc. So place or move your stops, cancel any orders that you're not comfortable with the risk. So if you're selling puts or try to buy a risky stock, you're not comfortable with the risk while you're offline, I would recommend canceling those orders. If you have any conviction buys, or something you do want to buy on a dip while you're offline, you can place a buy limit order at the price, your conviction price. Again, these strategies aren't just for making money trading through a storm, etc. You can also use these. I use these when we're on vacation, even when I just go to the beach for the afternoon. Often I'll check and make sure, see if I've got to move any of our stops. If I have any orders I don't want to hit while I'm away. So again, these are strategies you can use just anytime you're you're offline or not watching your screens. In case you're going to be offline for a while, you might want to download, test logging in, and actually using the mobile apps for your trading platforms. So if you lose internet access, hopefully you've still got cell phone access and you can trade using mobile apps for most of the trading platforms. I do not trade on mobile apps yet. We do have them for at least some of our platforms. But again, I trade off a desktop. So along those lines, we have a backup mobile hotspot, Verizon Orbic Speed 4G LTE mobile hotspot. Our plan, it needs to be activated. I did not use it through this hurricane, but I would recommend that you activate and test any backup internet access that you have, whether it's a mobile hotspot or through your cell phone provider, etc. I did do a series of videos on a product review for the Verizon Orbic Speed 4G LTE mobile hotspot, and those are posted on our sister Virtual Consulting 101 YouTube channel. We also have a playlist on our YouTube channel entitled Trading While Traveling, and I'll probably add a link in this list to our previous videos on trading while traveling. If you have to bug out, evacuate ahead of a storm or a hurricane, hopefully some of those tips of trading while traveling can also help you out. So if anyone else has any tips on how to make money trading through a storm, trading while traveling, etc., please share those in the comments in our Discord, etc. We've also been talking about making money trading in October, trading again, October, the October effect is that some of the biggest crashes have occurred in October. You can hear why you don't need to fear that. But again, another strategy to avoid a loss in October while you're going through a storm, etc. Maybe to have some downside protection. Again, markets trading at all-time highs. So if you don't want to short, you're not comfortable shorting at this point, you might want to have some kind of downside protection, particularly if you're going to be offline for some period of time, just in case we get one of these October crashes. So also we've been talking about the fall, again, seasonality, the trends, even though October's has some of the biggest crashes, tends to be a positive month, and fall tends to trend positively. So again, it's one of the reasons I'm not jumping into those shorts on particularly the Dow and the SPY. As the seasonality trend is up, we may get some short-term corrections. So you might get some short-term opportunities using some of those short ETFs. But again, the seasonality trend, the monthly trend should be upward. Okay, if anyone has any last minute questions, comments, topics you'd like to discuss, please throw those up in the chat. Yep, hamster, that's my point. Only bet with what your company's sleeping on, or again, if you lose internet access, and again, you don't know how long you might be without power, without internet. It could be hours, days, weeks. So make sure you're safe and comfortable with the positions you have on, and take it. Make any changes you need to make well in advance of the potential of risking power or losing power or internet access. I don't know the answer to that offhand during election years. Right? That's a good question. I'll see if I can get more information about election years, and we can discuss that possibly going into the election or maybe next week. If you do have any other questions, comments, stocks you want us to look at, please post them in the comments to any of our videos or in our Discord. Again, you can tag us in our Discord. We're BeachBum Trading, all lowercase, other characters, symbols, etc. Anyone else is an imposter. Anybody who DMs you or sends you a friend request out of the blue, we would not do that. So they're an imposter. Please report them and ignore them. We will let you know in advance if we're going to contact you or send you a friend request. Also, you can contact us via our social media sites, which are all in the link section of our homepage, beachbumtrading.com. So again, any questions, comments, we'd also love your recommendations for improvement for any of our weekly trading game plans, our videos, our tools, resources, our community, etc. We really need your feedback as to what we can do, what would you like to see more of, less of, etc. So again, we hope you like this content. Please smash the like button. Help us try to get the YouTube algorithm to someday show us some love. But we really need your help in sharing our content with other traders around the world. Invite your other traders to join us in the live stream chats. Share our content, share our video, our postings on your social media sites. Let's continue to build our BeachBum trading community for the mutual benefit of all of our fellow BeachBum traders. So, assuming our internet stays up, we'll see you again tomorrow, Sunday, 10 a.m. for part 2 of our weekly trading game plan for the trading week of October 14th through the 18th. Where in part 2, we'll be selecting our top swing trading stocks to watch, stocks in our bullpen, stocks on our shopping list. Also talk about dividend paying stocks and how we can use those to generate income while we're waiting for our swing trading stocks to set up, and also using several options strategies to also generating income while we wait for our swing trading stocks to set up. So thank you again to everyone that joined us in the chat, everyone that's watching after the fact. And we hope to see you again tomorrow for part 2, and have a great day.